First of all, as you can see here, we have an amazing group of regulators who are going to talk about regulation in a moment. But can everyone just give a round of applause to Commissioner Pham? Do you see what's on her foot right now? And she has taken the flight from the US to Singapore to be with you all. So please, kudos to you.
Thank you.
So the US is getting a lot of attention, not for necessarily good reasons. A lot of it's around regulatory clarity. We need regulatory clarity. It's what we hear a lot. And I want to kick off with the commissioner and the superintendent on, let's take a step back for a second. The current crypto winter, how much of it actually has to do with the result of a lack of risk management, compliance, policies, controls, and how much of it actually has to do with this regulatory unclarity?
I think this is such an important question. So let me first just start off with my standard disclaimer, which is that the views I share today are just those of my own as a commissioner and do not necessarily reflect that of the CFTC or of any other commissioner. So like I said, this is such an important question because in many respects, I think what we need in the crypto sector is getting back to basics. Here you've seen failures of basic risk management, failures to have sufficient compliance policies and procedures that are effective, and I think those types of irresponsible business practices have unfortunately given the broader sector a bad name. You know, I've been reviewing crypto projects in my previous role since 2018, and as part of the due diligence process, you would see that because these were startups, they didn't necessarily have the most robust policies and procedures or risk management programs in place. But one of the things that's been encouraging is I do think that since 2018, the crypto sector has been investing in the right resources and the right talent to bring all of that up to snuff. But of course, it all depends on individual firms. And that's actually one of the reasons why I enjoyed speaking with Superintendent Harris about her examination program, because I think she's got one of the longest track records of actually supervising these firms and in ensuring that they have responsible business practices in place. So that's why we need to make sure all these activities are within the regulatory perimeter, whether it's at the state level or whether it's at the federal level.
Over to you, Superintendent Harris.
Yeah, thank you. Good afternoon, everyone. I think, you know, as the commissioner said, it really is such a combination of a maturing sector, still maturing, still with some room to grow and opportunities for improvement. But there really is a lack of regulatory clarity other than in New York State, where we've been a prudential regulator of cryptocurrency since 2017. And if you step back and ask yourself, what does good look like in terms of crypto regulation, what you would come up with really is what we have in New York, with capitalization requirements, cybersecurity requirements, BSA, AML. On the stablecoin side, we have reserving and redemption requirements. And that's why the New York regulated companies really did come through the crypto winter fairly well. We haven't seen any of our licensees, touch wood, experience bankruptcy because of our capitalization requirements. And so I think having that regulatory framework has proven good for consumers, good for institutions, and good for markets. But to the commissioner's point, really having a compliance apparatus that scales with the business. And that means policies and procedures, that means having the right talent. That's really important as the space matures. And especially because I think what we saw in the crypto winter was not unlike what we saw in the 2008 financial crisis, although thankfully on a much smaller and more contained scale, with too much leverage, not enough risk management. And so history sort of repeated itself a bit. So we're very much looking forward to continue to work with the federal regulators as they work to develop their frameworks in cooperation with Congress, because I think having state and federal regulators together will help the sector tremendously.
That's such a great point, because I've been saying, you know, if you think about it, the crypto sector is almost experiencing the history of money in a compressed and accelerated fashion. Many of the same mistakes that have been repeated before, but luckily we've had regulatory responses for each of those incidents, and so I think that's really important to take into context.
So let's talk about existing market regulation. A lot of it's geared towards very centralized organizations, and as we know, crypto enthusiasts are really focused on decentralization and disintermediation. How what is your view, and I'm going to address this to Superintendent Harris, what is your view on the right mix? Who's really right? Do we have complete decentralization, disintermediation? Is it somewhere in between, or are we really looking at most things are actually centralized?
Yeah, I think to date we've seen mostly centralized. To the commissioner's point, we're sort of seeing the history of money repeat itself, but in this accelerated fashion. Obviously, we're going to move and see more increasingly decentralized frameworks and use cases. We'll see more tokenization of different types of assets, right? The space will mature and grow beyond cryptocurrency, beyond payments and other things. But that's, I think, for regulators, something that we need to be thinking about in terms of how do we leverage and take from existing frameworks in the commodity space and the security space when we think about banking, but innovate ourselves for these instruments that are themselves shape-shifting and don't always fit neatly into the regulatory boxes that we have.
Yeah. So I think this is, again, another example of where we have existing regulatory paradigms that can be thought of to fit to this space. So there are existing exchanges, regular electronic trading venues, that have anonymous execution that's all to all. There's a way that we deal with that. There is algorithmic trading. There are automatic market makers. There's a lot of really interesting initiatives that are being done by the MAS, by BIS innovation hubs, by other central banks and financial regulators around the world to explore the potential of DeFi. So I think maybe what we need to do is think about intermediation in a new way with this technology. Maybe it's more about having the right gatekeepers in place. I almost think of it as a ball pit. So you have to take off your shoes and get checked before you jump into the ball pit, and then it's a free-for-all, right? So maybe we need to think about intermediation in a different way. But I do think that where you have more direct access, you have to make sure that you have compensating controls and compensating risk management to mitigate any additional issues that might arise.
So, we hear about consumer protection a lot for good reason. And I think most people in the audience would agree that consumer protection against bad actors is a good thing. But let's unpack a bit when we think about the limit to what regulators can actually do around consumer protection. And wouldn't putting in more regulation, if we're going to play devil's advocate, allow basically a green light for more retail to come in to speculate in the markets, potentially? Commissioner Pham.
I have to be honest, I don't understand this argument at all. If you think about it in the context of drinking or smoking, nobody thinks that we shouldn't have regulations for potential dangerous effects of, irresponsible drinking and smoking. So I just don't get this.
Very clear. Over to you, Superintendent.
Well, and to that point, right, we have these new set of activities, this evolving set of activities. Consumers don't understand them, and I think it's important that we are arming them and protecting them. So arming them with information, protecting them from the ills that happen. But I think part of the challenge as a regulator is you want to allow for responsible innovation in the space. You don't want the early adopters to do all the rent seeking and then pull up the ladder after them with consumer protection regulations that maybe go too far and prevent others from enjoying the gains that come from technological innovation. But it's a really hard balance to strike. But absolutely, there should be plenty of consumer protections in place. We have a number of those baked into our regulations at DFS around disclosures and advertising and other things that we enforce vigorously.
Yeah, so that's exactly why I don't understand an argument against regulation, because you can take a common sense approach to it, and the CFTC has similar regulations around disclosures, marketing, advertising. I think it's important that we have education and suitability requirements.
Appreciate that. And if we change the conversation just slightly up in an inward way, looking at your organizations, and I'll start with Superintendent Harris. Where are the blind spots? What is going really well? What are regulators doing a good job at?
Yeah.
And where are areas for improvement, or where are potentially blind spots where you need to spend more time?
Yeah, so I not to toot the DFS horn, I think we do a pretty good job, and there's always room for improvement. As I said at the top, if you really step back and ask yourself what good looks like in the space, it really does look quite a bit like the New York framework. It's always a challenge for regulators to keep up, but by some design, right? You don't want regulation necessarily front-running innovation, but nor do you want it lagging so far behind innovation that consumers' markets get hurt. And so that really is the challenge for regulators, I would say, more than the blind spot, is how do you strike that balance between staying close enough to innovation to prevent harm, not front-running it. And then the other thing I would say is always challenging for regulators, especially in a space like this, is talent acquisition and retention. We've really built out our team at DFS. When I arrived 13 months ago, there were maybe 3 people in our virtual currency unit. Just this year, we've grown that to about 45. We've made a lot of operational improvements. We've added clarity for the marketplace. We've issued new guidances around blockchain analytics and stablecoin. But the talent acquisition is really challenging.
All around, not just with the regulator.
Not just for it's harder when you pay less.
Commissioner Pham, what are your views?
So one of the things that I like to say is that the CFTC's principles-based regulatory framework means that we can adapt and anticipate new changes and new risks more quickly. That's why I really think a principles-based framework is most appropriate when you have rapid innovation and new developments in market structure. So I think that's something that we've done great. This is a regulatory framework that has stood the test of time through many, many market stresses and disruptions over the last 50 years or so. I think one of the areas that is always room for improvement is breaking down silos, and in particular understanding how the interconnectedness of the financial system works. It's very important that all of the different pieces, from banking supervision to payments to financial markets, are really taken together in context, and so that's why I've been very pleased to focus on international engagement, cooperation, and collaboration.
Absolutely. I will underscore that. The interconnectedness of markets and businesses and organizations is sometimes very much underestimated. And when things go wrong, it's like a domino effect. I'm going to talk here a little bit about, and I know there's lots of questions. Vote for the ones that you like, so I will eventually get to them, and we'll do the most popular ones when we have the time remaining. But I want to talk a little bit about the fact that both of you have come from private sector, which is actually a really valuable thing in having that private sector viewpoint coming in as a regulator. So, Commissioner Pham, I'm going to start with you. When you think about the skill sets that have helped you the most as a regulator now, what would you identify as some of those skills?
Yeah. So I think what's been really helpful for me is that I've had this hands-on experience both at the CFTC, previously implementing Dodd-Frank and the global derivatives regulatory reforms over the swaps market, but then to go over to the private sector and actually have to roll up my sleeves and do the hard work of implementing them. So I certainly every day wish that there was more regulatory clarity when you have to make a call on, do you implement a process or a system this way or that way? There's no gray areas. You have to make a decision to build logic a particular way. So I think that hands-on experience, being in compliance, being in legal, being in regulatory affairs, working very closely with business and product development teams, that brings really important operational know-how. And I think that's something that we need to be able to attract more talent and to be able to have more open engagement with the industry, so that way there's a benefit from both sides to having that exchange of information and sharing of learnings and observations.
Fantastic. Superintendent Harris?
Yeah, I would agree. I started my career as a lawyer on Wall Street before going to the Obama Treasury Department and then being a special assistant to the president in the National Economic Council, managing the financial services portfolio. Before then, going to Silicon Valley, starting and taking public my own fintech, and then coming to this role. And so really feel like I've seen the policy making, the regulatory, the private sector for both incumbent institutions and the entrepreneurial side of things. And I really do think, to echo the commissioner's sentiments, it makes you, I think, a better regulator. It also makes you a better operator when you're in the private sector, to understand the puts and takes, the tensions, to speak both languages, to have that fluency, I think is incredibly important. I also think, to the commissioner's point, it really does drive you to engage more, because you realize how important that cross-pollination of ideas and languages is. we had an example at the department where the team wrote a guidance, and it came to me for final clearance before being published, and I read it, and it was on the banking side, and I read it, and I said to the team, I have absolutely no idea what this says. I am highly educated, I have a lot of degrees, I've done a lot of things in my life, and if I were a GC or a head of compliance, and you sent me this document, I would have no idea what to do next. And that's a problem for a regulator if you're writing rules or issuing guidance that can't be implemented. So we had to send the team back to the drawing board. But I think being able to say, right, I've been in the shoes of having to implement, and similarly when you're a private sector operator, being able to anticipate what the regulators' questions are going to be. When I was starting my InsurTech and we had to get licenses in every state in the country, I knew that because we were using AI and machine learning, the regulators were going to ask about personal data and how we were using that. They were going to ask about bias. They were going to ask about risk. They were going to ask about capitalization. We met with every regulator before we ever filed a piece of paper, and I could anticipate their questions, and it meant that our licensing went that much faster. And it meant, as a startup, when we hit bumps in the road, as every company inevitably will, that we had capital, so to speak, with the regulators so that they knew we were good actors, and we had that relationship already baked in.
This is such an important point. So, one of the things that I did when I was at Citigroup, first as a global head and then having these enterprise-wide roles and then eventually rising to the top of the house, is understanding how each of the businesses are unique and what those processes are with those businesses, and to make sure that you're designing your solutions to be fit for purpose. And so you have to get all the information, you have to learn as much as possible, and then you have to develop pragmatic solutions. I would always ask for people to give me a demo of whatever tech or platform or system that they had, so that way I could come up with the appropriate compliance and controls and risk management and governance. And so that's why I've been pleased that at the CFTC, I've been able to take the same approach and do my learning tours to engage with the industry and to hear about it directly from them. And I really think that this is something that many regulators outside the United States do, and I hope to see more of that in the United States.
Fantastic. And now we will go to some of the questions. There's a couple very clear, popular ones. I'm going to start with the one that actually came up first. What are your views on different consumer protection measures between digital assets and cryptocurrencies? I guess, first of all, it would help to sort of unpack what does consumer protection mean from a CFTC standpoint versus a DFS standpoint. Commissioner Pham, would you like to start?
I don't know that there is a difference. I think any kind of retail protection is retail protection. You want to make sure, like I said, that you have sufficiently educated users, that you have suitability requirements, that there's fair dealing, fair communication, disclosure of all relevant information that would be necessary. So I honestly don't think that there's a lot of difference between various, consumer or customer or investor protection regimes. It's all the same principles. And, I've implemented many policies globally, and all regulatory regimes have the same similar fundamental pieces. So I don't know that there's a lot of difference there.
That's actually very good news to hear. Over to you.
No, and I would agree with that. And one of the things that we've done at DFS, in addition to the regulations that we have on the books, each of our regulated entities has an individualized supervisory agreement. So we're able to tailor the rules to the risk that different business models present. If you have different products, you're using different chains, all the different things that you can do when you're innovating, we can take the regulations as our baseline, but then take a risk-based approach to consumer protection depending on the business model and the use case. And I think that's been really helpful for us. But I completely agree with the commissioner. I think the distinction between cryptocurrency and digital assets maybe is not the right distinction to draw.
And I think it's really telling the experience that the superintendent has had with individual firms and in understanding from a risk-based perspective what is the risk profile of their activities and their client base and that type of thing. So these are all really important things to keep in mind. But I also say, again, this is something where regulators should just get back to basics. When you look at market abuse regulations or market conduct regulations, they're the same across any asset class, whether it's securities, whether it's commodities, whether it's going and buying a car. So there should be no lying, no cheating, no stealing, and be responsible. I think that's common across the board.
Makes a lot of sense to me. All right. Let's move on to the next one, which really focuses on the decentralized ecosystem part of the digital asset world. How far along are regulators in terms of grappling with more decentralized ecosystems? And as they become more decentralized, I know there's a big debate about whether DeFi is truly decentralized or not right now, but let's assume that we're moving towards decentralized ecosystems. How will regulators, and how are you guys looking at regulating that? Commissioner Pham?
So I think what's really telling in this space is if you look at international standard setters, so if you look at a lot of the work that IOSCO is doing here about approaching DeFi, I think that's a really good approach where you look at it and you analogize it to what's existing. And there's a lot of really interesting projects that are being undertaken, some again led by MAS, as well as other central banks. There was Project Guardian that was just announced, where you look at DeFi and you realize that it's not that different or new from what we have existing. So again, some of the ways that I think about regulating DeFi activity is similar to algorithmic trading. This is something that we've had to deal with for decades now, and I think that's a really good place to start.
Yeah, I would say on this, it really is early days for the industry and therefore for regulators. So we are in a lot of ways innovating together based on first principles. And the challenge for regulators, again, and I made this comment on an earlier session, one of the main differences, I think, between the private sector and the public sector is in the private sector, you generally have fewer stakeholders that you're managing toward, right? You've got shareholders or investors, you've got customers, whether they're institutions or individuals. In government, you're dealing with a much broader set of stakeholders and a much broader set of equities, right? So we're not just worried about safety and soundness and consumer protection, but national security, right? These other things. And so for us, taking all those things to account and developing a regulatory framework that's meant to meet some of these purposes takes a lot of time, and especially in an environment like this where things are moving very quickly. So I think it's still really early days, but there are lots of principles and frameworks already in place for us to draw from as we look to regulate the space.
Great. And Superintendent Harris, I'm going to direct this one at you, and if you want to start on custody.
Yeah.
The question here, I'm going to modify a little bit, says, what are the regulatory requirements for custodians to ensure secure storage of private keys? More generally, what are the guidelines around custodying of any digital asset?
Yeah. Yeah, I mean, I think it sort of goes back to first principles. So I'm sure there's lots of details here that the questioner is after. But again, we really have a risk-based framework that looks at, right, when we're talking about digital assets or keys, right, is it hot or cold storage? Is it wholesale or retail, right? What's the volume of transactions you're dealing with? So we really do take this risk-based approach. But again, back to first principles, the cybersecurity, the privacy, the general security of being a custodian. These are not new frameworks. When we talk about custodians, we in New York, we regulate one of the oldest custodians in the country and probably the world. And so you take that framework, those first principles, and you apply it here as well with some tweaks, right, that to adjust for the technology and the speed.
Do you have any views on that?
Custody is normally done by banks, and the CFTC doesn't regulate bank custody, so I think I'll pass on this one.
Just making sure everyone is aware of that, yes. Good. This one is, hold on. I'm going to hit the click on that one. Okay, so we're going to go back to, and it is the most popular next one, so I'm going to have it addressed, even though I think we made it pretty clear that consumer protection is consumer protection. It's good, but where is the line drawn for moral hazard and personal responsibility? And I think that is a legitimate question to ask. Like, at what point are you personally responsible for kind of doing your homework? Commissioner Pham.
I think this is something that, again, no matter what you're doing in life, you should do your homework before you do it. So the example of buying a car, right? You're not going to go and buy a car without having done some research about it before you go and do it. There's another example that I've given in the past in some media interviews, which is that I think it's also the way that people think about digital assets. So I had said previously, if they thought about it as a lottery ticket, right? It's not a sure thing. You can buy a lottery ticket and maybe you'll win and you'll win big. and maybe you won't, but you've spent that money and it's gone. You're not getting your money back from the lottery ticket. So that's one of the things where I said, if really what you're doing is buying speculative cryptocurrencies to speculate, then just like a lottery ticket, maybe you win and maybe you don't.
Yeah, I mean, I think it's a great point. And for us, we think about, as all regulators do, we have to ensure that our regulated institutions are providing the relevant data for consumers to then make their own decisions, right? We don't take legal activity and take it off the table for citizens. We say, we require disclosures, and here's the information you need. And then we provide education. And to the commissioner's point, when you provide the information, you can't lie. It's got to be accurate information. And you can't be cute about, in the case of digital assets, right? If you're partnering with a bank, what's FDIC insured? You have to be clear. So you have to be accurate, you have to be clear, right? All of these things. And then it is for the consumer to decide if this is an instrument worth using, investing in. And we want to. One of the other challenges, I think, as a regulator, is you're trying to manage sort of diverse set of consumers, from very sophisticated users to maybe less sophisticated users, and striking the balance there.
Yeah, I think that's why you can't have a one-size-fits-all approach, which is another important point.
Absolutely. Not everything is exactly the same. But I think what we will skip to right here is another interesting one around how it's hard enough for industry folks to keep up with what's going on. And the question relates to, how do regulators understand all this evolving technology, but also just what goes on from day to day on the crypto and digital asset side? What are the tools that you use to keep up? How do you keep up? And shed some light on that. Appreciate it. Commissioner Pham?
Yeah. So again, the way I think about this is really not that different from any profession or any field, whether you're at a private sector, whether you're in financial services or not in financial services. You have to focus on developing your talent, making sure that they have the right skills, the right continuing education, the right resources. And again, I think it's best to learn in a hands-on way directly from whoever is doing the thing. I don't know how I can regulate something if I don't understand it. So again, from my perspective, what I've been doing is going out there, getting on the ground, going and doing my learning tours, and seeing the demos of the use cases, of the technology, of the risks, of the opportunities, of the controls, the entire framework and the entire process flow from start to finish. And I think that's a really important thing to be able to do, is to get out there and see it with your own eyes.
Yeah, I think the engagement is really important, right? You have to be out there talking to innovators, talking to consumers, talking to academics, talking to regulators around the world, and creating that atmosphere and that ecosystem. We have our companies come in all the time, whether they're looking for a license, whether they have a license, not just to talk about their direct dealings with DFS, but to talk about what they're seeing, what they're planning, what they're hearing, and getting that feedback real time is incredibly important. So that engagement is a really important part of the process. And I agree, talent. And it really is, when I talk to my team about talent acquisition and retention, it's sort of like the Hunger Games. You just got to go out there and get the best talent you can. And as we've been building our virtual currency unit, we've been taking talent from federal regulators, and I'll plead the fifth on whether or not we've poached anybody from the CFTC recently, although there's lots of back and forth and cross-pollination, I think. The crypto winter, in all candor, was a good recruiting opportunity for the public sector. So we took full advantage of that for talent acquisition. But making sure you're keeping your talent pool fresh and engaged and providing training opportunities for them is also incredibly important.
Yeah. So I think that's why some of these structured engagement forums are important. So one of the things I've been doing is I sponsor the Global Markets Advisory Committee, which is actually a multilateral forum for the CFTC to get expert advice and input directly from the public, whether it's industry experts, whether it's public interest, academics, other regulators, et cetera. And so one of the things I'm looking at is creating a subcommittee on digital asset markets to have that benefit of harnessing all these resources and bringing it together to the CFTC. Another thing is, the CFTC had come out with Lab CFTC very early on in order to promote outreach and engagement. I'd love to take that to the next step with a true regulatory sandbox. We haven't really had a true one where people can come in and it is independent from enforcement. And so there's a way to have, a pilot regime or a more open dialogue. And it's the other reason why I've proposed an Office of the Retail Advocate, which not only would advocate for appropriate retail protections, but also would study and understand some of the specific issues or concerns from a retail perspective and what types of additional measures ought to be taken.
Excellent. And that sounds like a fantastic, and GBBC wholeheartedly agrees, bringing multi-stakeholders together and getting experts to actually weigh in and making sure that you're getting different voices to the table is incredibly important. So really appreciate the work that both of you are doing.
To that point too, I mean, we're bringing different stakeholders and different folks to the table. I think all of us do that, and making sure you're making data-driven policy. I think there's so much energy, I will call it, in the space. I think it's really easy to rely on your reflexes about whether you like crypto or you don't like crypto. But the big part of engagement that I know from GBBC and from getting to know the commissioner is, what's the data tell you? And that's such an important part of policy making as well.
Yeah, I don't think people would make business decisions without data to back it up, and so I don't think regulators should be making decisions without data to back it up either.
I think a lot of people here would agree with you on that, so both of you on that, so well done. We're going to round out the last few minutes, and I'm going to direct a question that looks forward, because I think it's very important as we go into 2023 for you to talk a bit about, and you've alluded to a little bit of this, but what are you planning for 2023 with respect to cryptocurrencies and digital assets? And then further, how can this community help you? Because at the end of the day, it's not just about take. It's regulator, give me. It's actually, what can we also do to help facilitate or remove frictions? So I'll hand over to you, Commissioner Pham.
Yeah. So when I think about what I have in store, what I'm proposing, what I'm looking at, it's really launching my Global Markets Advisory Committee. I've gone and met with other regulators around the world who already have registration and oversight schemes for digital assets, and learning from them, asking them what worked and what didn't, because they've been doing that since 2019. And I've spoken with Superintendent Harris about her successful program that's been in place since 2017 and what kinds of learnings and observations that she's had there. So I'm looking forward to really taking that to the next level in my GMAC by taking high-level principles like what the Financial Stability Board has put out, but going to the next level of how do we implement that? What are some industry best practices on how to actually operationalize that? That's what I spent my career doing, and so I think it makes sense that I use my platform as a policymaker to be able to further delve into and explore those issues. But besides that, as an independent commissioner, it's actually the chairman of the CFTC that sets the policy agenda for the agency. And as I've said many times, I think that we can't fail to act any longer in providing regulatory clarity with the tools and the authorities that we already have. And so I really do hope that there is some urgency behind taking that next step for the United States, because I do think that we are behind the rest of the world. It's not too late, but we are behind.
So one of the things we've done during my tenure at DFS is we've taken what's in our regs, we've taken what's in our supervisory agreements, and we've added transparency by issuing more and more guidance. So just in the past year, we've done blockchain analytics guidance, stablecoin guidance. I think what you'll see from DFS coming up is more guidance on consumer protection and what our expectations are there, more guidance on bankruptcy and liquidation authority and how we see that space. So those are two things. We're working on guidance now about banks that want to be engaged in the virtual currency space. So for us, it really is a product roadmap that's meant to add transparency and clarity to the space. I would say the one thing that you all can do for us, maybe two things. One, as I said in an earlier session, don't ever surprise your regulator. It's just bad business. Do not surprise your regulator. And the other thing I would say is, don't treat the regulations like a check-the-box exercise. There are regulators spending a lot of time, energy, talent, trying to work with industry and come up with a nuanced approach that helps innovation but protects consumers, institutions, and markets. And it's really annoying, I will say, when companies treat the regulatory requirements like a check-the-box exercise and approach it with a sense of entitlement rather than with the deference and sense of collaboration that the regulators are bringing to the space.
Well, I think we could go on for hours more, but our time is up, and I want to thank both Superintendent Harris and Commissioner Pham for their incredible insights. And you all have some marching orders. Engage, be thoughtful, and please, please try to make sure that you talk to each other as well, also to other stakeholders and to the regulatory bodies as appropriate. Thank you.